Namaste and welcome everyone. Thanks. Everyone seems to be muted and we don't have echo. It's usually a challenge when we have a large group and a Zoom call. But thanks for joining in this evening despite a very short notice. And I was saying, Mike, it's a long weekend and I'm sure you're getting geared up for that. But we would like to just maybe introduce briefly about Staggered, just because some of you may be new. Staggered Equity was formed by Reshma and I'm Prab Dahal here in Charlotte, North Carolina. Reshma lives here as well. We started the firm as initially a private equity to, do multifamily projects, but we also have a number of other ventures now that we're supporting early stage startups, fintech, and a few other things that are really exciting. And we provide advisory services, stay in the boards, and also help build teams and fill in where the ventures need our help. So we have currently, from on the real estate side, we have a number of projects that we've kind of completed. So we're really pleased to introduce today this opportunity. And maybe Reshma, do you want to briefly introduce David here, talk about the deal, maybe a couple of lines, and then hand him over?
So David here is working with us together in this deal. So he's also a partner of Sean, who we have worked with before, and we are currently in the deal with. So David and we were looking at a lot of deals. We were supposed to close on few, but we just haven't had a chance to do that. He's a veteran real estate investor, and we look forward to, today he's the one who's presenting us this deal. So we look forward to hearing more from him.
David. Yeah, thank you. So I'm David Moody with Pipeline Capital. And, as Reshma stated, me and Sean Fuller, he would be here, but he had surgery here a few weeks ago and he's having some complications. I wouldn't say complications. He's just having some issues and he's trying to recoup that. He's kind of in and out of consciousness, I guess you could say, with some of the meds that he's on. But so we've partnered up on several deals now. We bought a 32 unit in North Pole, Alaska last year. This deal come to us not long after we completed that purchase, along with another purchase that is in Seward, Alaska. We are finding some really lucrative deals in that area. So we're concentrating real heavily in the Alaska, area, just trying to find, little niches, specifically with the LIHTC properties, and that's low income housing tax credit properties. It's similar to Section 8, but it's not Section 8. There's different standards and things like that the government holds us as owners to. And, some of that is the upkeep of the property itself. The companies have to, the government comes in and does, quarterly and yearly inspections, things like that. But that's what we are focusing on now is getting, LIHTC properties under our belt. We're finding a lot of success with them. A little background on me. I've been in the construction industry for over 20 years. I've built a name and reputation that is kind of supersedes my presence on a job. Very proud of that. I've been all over the country doing this construction. If it can be built, I've probably built it. And the last, I don't know, probably 5 or 6 years, I think I was like everyone else. You want to retire at some point. And I started investigating and learning and getting around the people that I can get around that, can teach me about multifamily investing. Probably started out just like the majority of everybody with single families and things of that nature, and it wasn't moving quick enough. So I got into multifamily and closed on 4 or 5 deals, I believe, in the last 2 years, and a pizza shop. So it's working out very well for me. But yeah, I'll be presenting today. And then you have my one of my partners, Mike Connor, here with us. Mike, you want to tell a little bit about yourself?
Sure. Yeah, I am an entrepreneur through and through. I've owned about four companies during my career. I've been doing businesses for about 30 years. I've been messing with real estate for many, many years and kind of got into the multifamily commercial real estate world when Sean and I met up a couple years ago in Hawaii. And we were both there at the exact same time and decided to have lunch. And we think a lot alike. We both are, our first company was an IT company, and so he brought me in to help out with business development and bring in some risk capital if and when needed, and also raising capital as well. So I'm pleased to be here. And one of the things that I wanted to mention is, David was talking about the LIHTC and also the Section 8. And one of the things that I've found over the individuals that I've spoken to in regards to what does that mean? And in a lot of cases, people assume that LIHTC is rental assistance. And I want to be very clear on that. It is not rental assistance. It is more of rent control. So there is no subsidies from the government that is paying for this rent. And there has been some concerns from some individuals that what if that ends up stopping? Well, that's not the case. There is no rental assistance with this. It is more rent control. So they are paying their own rent.
Very well.
Did you want to pull up the OM, David?
Yeah, maybe that would be the best way.
Let me get that pulled up. All right, so this is Kellum. It's 130 units. It's located in Fairbanks, Alaska. As I stated earlier, me and Sean purchased a 32 unit in North Pole, which is 10-15 minutes down the road. So whenever me and Sean purchased that, we both went and acted like two big kids and sat on Santa's lap. So we had a good time up there whenever we purchased that one. But and this is a rendering here of the property. We got 4 buildings total. They're all 4-story. And they range in size: 2 bedrooms, 3 bedrooms, 1 bedrooms, things of that nature. Here's our normal investment disclosure. I'm not going to read it all. Y'all can read through it as you see fit. We're not investment advisors, so please consult any advisory person that you would like on anything you have questions on. Let's see here. Here's a little, the outlook of our summary. We're going to go through it and things like that. Here's our partners, Sean, myself, Mike, Lisa. She's involved in this. She's not on the call. We've got Carson, Sharon, Kevin, Mary, Jim, Joe, and Tim. And then obviously we've got Prab and Reshma. We haven't added them to the deck yet. We need to get that taken care of.
Yep.
A little bit about us, between Sean, myself, Mike, Lisa, got over 2,000 units under management, 50 plus transactions completed. So, in a group, I don't even know how many years of experience there is, if we was to add it all up.
Well over 100. Yeah, that is one of the things that I am proud to work with our team is, because this is not just your average people. These are entrepreneurs and business people with a lot of experience in their background. So,
yep. So a little quick rundown of the property. Here's an actual picture of the property. I've got to see if I cannot put. There we go. Now everybody's picture is at the top and not all over the slide here in front of me. So a little bit about the opportunity we have. As I stated, it's in Fairbanks, Alaska. Purchase price $14.75 million. Price per unit is $115,385. Got 130 units. Average unit size 900 square foot. So when they're fairly large units. Vacancy less than 3%. This property has a waiting list currently. I think the last time we checked here a few weeks ago was 60 people. This property stays full. It's a 2010 vintage, so it's a fairly new property. And we'll get into a little bit of that as far as the vintage and how LIHTC and all that stuff works a little bit later. But as you can see, Mars Investments, Pipeline Capital, and Partners are pleased to present the opportunity to invest in Kellum Place Estates located in Fairbanks, Alaska. The acquisition totals 130 apartments consisting of 6 one-bedroom, one-bath, 80 two-bedroom, one-baths, and 44 three-bedroom, one-bath units. The current ownership has meticulously renovated all units and spent considerable funds on exterior renovations, resulting in a steady tenant base. This property has an upside opportunity to continue to push rents and grow the bottom line year over year. The government low-income housing tax credit LIHTC program has historically seen 4 to 5% year-over-year rent increases, is what's supposed to be in there. This strategic location in Fairbanks offers residents a blend of urban convenience and natural beauty. An investment in this portfolio gives you the opportunity to diversify your real estate holdings and benefit from the cash flow and returns generated from this community. After you read through this offering, reach out to anybody and we can get you lined up, answer any questions you have or anything of that nature. Going over the key terms again. Purchase price $14.75 million. Loan assumption $7.4 million at 4.2% interest rate. This loan still has 6 years left on it before any prepayment penalties are incurred. You see loan assumption number 2 there, 0 interest, 0 payments of $5.8 million. This isn't necessarily a loan. It is I guess you can call it a loan because it is, majority of it is due to be paid back, but it's through the Alaska Housing Finance Corporation. They have a influx of money to where they have just been honestly giving money out. These other grants and loans that are associated with this property, there's no payments, no interest due until 2058. Mm-hmm. So we still have 30 years left to pay on some of this stuff.
Loan number 2, about $400,000 is written off per year, correct?
Exactly. I was just figuring to say that there is one of the loans that's associated with loan number 2 there is I think it's $3.4 million is what's left on it, somewhere 3.4, 3.3. And about 400,000 of it is written off every year. So less than 10 years, it's going to be completely paid off.
And that write-off is part of the LIHTC program, Dave, or is it? Okay.
Yeah. Yep. Required equity on this deal is $1.8 million. Minimum investment is $50,000. Holding period is 6 years. Total equity split is a 35-65 deal. We put it at 6 years specifically for the first loan because of the prepayment penalties that can come with it, things like that. It's on a yield maintenance type structure. So it's a step down depending on how many years we have left in it and how much is owed on it. Investor class returns, like I said, minimum investments $50,000. Projected IRR is 17.85. Average cash on cash is 7.1. Average annualized return is 23.78 for an equity multiple of 2.43%. As you will see as we go through the slides, we tend to try and stay as conservative as we can. We like to stress test our underwriting and things of that nature. So if it can survive our stress test and we, still have great returns for our investors, we will try and tackle the deal. And this one here exceeded our stress test. I mean, it can really go a long ways before this deal is ever in any type of jeopardy. I went the wrong way. Sorry about that. Enhanced property management. Upon transition to new ownership, a responsive and efficient in-house property management team will be implemented, ensuring superior customer service for tenants. So just so you know, Sean has built a property management company. He has already got self-storage unit, a retail center, a couple apartment complexes under his management company that are in the Alaska area around Fairbanks, around Wasilla, Anchorage, in those areas. So we are going to be taking this on in-house, which saves money on the third-party fees, contractor fees, things like that, which we can handle all that in-house now. Established market presence. I'm sorry, I get tongue-tied. If you don't know, I kind of get a little nervous on this stuff, but I'm just going to keep forging on here. So
if this is your nervous mode, you're doing amazing, David. So
trust me, I'm over here shaking. But
I got to figure out how to make him more nervous. Is what I got to do. So
just don't put me in front of too many more people. Established market presence. The new ownership group has additional commercial real estate holdings in the Fairbanks market, reinforcing their community commitment to the area. Operational improvements. Implementation of updated policies, procedures aligned with affordable housing standards, integration of modern technology for streamlined operations, new online systems to enhance tenant communication and accessibility, resident-focused approach to improve the tenant experience. So a little bit on that right there. We've implemented property management software called LIHTC. It is the number one LIHTC property management company that's out there. It provides two-way communication. It provides online access to the tenants to, pay their rent, submit maintenance requests, just a whole plethora of goodies, so to speak, come with LIHTC for the tenant. So, and it eases everything on our end too, because we can input whenever a tenant applies to rent from us, we can input their yearly income, how many people's in their family, and it will populate either more or less a go no go type situation for a tenant, whether they meet the restrictions to rent from us. So it's very streamlined. Shouldn't be any no mess ups as far as someone getting in to the property that's not supposed to be there. So we have a bunch of safety nets in place to keep that from happening and keeping our investment opportunity here out of risk from kind of going non-compliant with LIHTC. We went over the financing structure a little bit earlier, but there it is. We're assuming an existing HUD loan for $7.4 million at 4.2%. Today's rates, what we're looking at, mid to low sixes right now. So almost saving 2% on the interest rate there is a definite benefit. And then, as I told you, we're assuming Alaska Housing Finance Corporation secondary loans. And I've been looking at LIHTC properties for year and a half, 2 years, underwriting them, things of that nature. And this is the only one that I've ever come across that has 0%, zero payments due for an additional 30 years. If you think back, this property was built in 2010. That's whenever these loans were started. So you're looking at an amortization of almost 60 years, or excuse me, 50 years. But that's also the benefit of just having to deal with the government complexities. If you have the patience to do that, and trust me, we have been very patient with this deal because we started this deal back in July, September of last year. So we're bumping a year that we've been working this deal now, and we're getting closer. We're probably within 6 weeks of closing, but we're getting there. Stabilized NOI. This is going to be stabilized NOI more or less from day one. There's really no occupancy issues. There's no major CapEx. As you can see, we got a budget of $165,000 for CapEx. This is just to give upgrades to the security system that has kind of fallen behind in technology. So we're going to upgrade that. Flooring replacements that are needed right now are being covered by the previous owner, and they'll be executed before we take ownership of the property. Going into a little bit of the CapEx deal, this property has a allocation that is forced by LIHTC, forced by HUD, that we have to set back a certain amount of money each year for CapEx expenditures. Right now, that account is upwards about $750,000 in that account. So today, the owner could go take $750,000 and just blast it into this property, and provide new flooring, new paint, new appliances, whatever. So we will inherit that $750,000 account to give us the benefits of having a nice little nest egg for any major capex issues that could potentially come up, and obviously help with unit turns and things like that as people move out. If they move out, we're hoping to create an experience where they don't move out. This is a buy and hold strategy. The good thing about this is we are not relying on any type of refi to meet any return metrics on this deal. This is just a straight up and down buy it, hold it, and operate the property and make money. Short and sweet of it. Another little summary here. You see a couple of pictures of the units that we have in there. You can see this. I've kind of spoke a lot about this. Boiler systems, parking covered and non-covered, construction type wood, washers, dryers, coin operated, plumbing and wiring is original. The good thing is 2010 build. So we have updated copper wiring. We have PVC piping. We don't have to deal with cast iron. We don't have to deal with aluminum. We don't have to deal with none of that.
I will throw in there that I personally walked two of these buildings. It is a beautiful property. There's no doubt about it. I mean, there's properties that I've walked that's, you just go into it. It's like, oh dear God, here we go. But this is one of those properties that's ready to go day one. It's gorgeous. It's a rare bird.
Yep. Property amenities, patio, balcony, fully equipped kitchen, heat included, energy efficient windows, energy store appliances, playground, off-street guest parking, on-site maintenance, on-site laundry, no pets allowed, barrier-free sidewalks. Location overview. As you can see, here's a picture of Fairbanks right there, and the little dot from an aerial view there. It's a long way from Charlotte, way over here. But yeah, it's like I said, it's about 10-15 minute drive to another property that we acquired last year. And then we also acquired another 30 unit apartment complex last year from the same seller in Seward, Alaska. Set up similar, and that property has not missed a beat. So let's see, continuing on here. Here's a mix of our floor plans, the current rents and target rents, things of that nature. As you can see, with the current rent, target rent, there's not much spread here. This is just because this property is already at the max allowable rent. So the government sets the rate, says you can only charge, $1,000, $1,100, however much it is for this particular type of unit. So every year, these numbers, the target rents and the current rents will change. Here about 2 years ago, LIHTC seen a price increase in the Alaska area of about 7%. Generally speaking, nationwide, it is in that 3 to 5% range every year. I will say that Alaska's put in a lot of money into housing up there because there is an extreme shortage. Like I said, we have about a 60% or 60 person waiting list at this property right now. And at the Seward property, we have about a 25 person waiting list, I believe.
25, 30. Yeah.
Yeah. So we constantly have a waiting list. All right. A little rundown of the CapEx. Security system upgrades, $150,000. We've already got quotes on this. So we know that this is where we're going to be at. We got a contingency of $15,000 for $165,000. So no big scares or anything like that. They should come up with that. A little rundown of the Fairbanks area. Vibrant city located in the heart of the interior, known for its unique blend of urban amenities and access to Alaskan wilderness, with a city population of approximately 32,000 and borough population of 92,000. Fairbanks serves as a hub for commerce, education, and military operations in the region. I don't know the specifics, but I have heard through the grapevine that the military is really increasing their presence in the Alaska area. Let's see here. Is it Is it this Air Force base? It's not this one. That's the big one up there. Is it, Mike? It's
Well, both of them are good size for sure. I mean, they have a
J Bear.
J Bear. No, J Bear is in Anchorage. Yeah, J Bear's.
Okay.
Eielson and Fort Wainwright are there in Fairbanks, and I'll let me share a little bit here on in regards to the economy up there. I don't know if you guys have been following politically in regards to what's been happening in the political world in how much of an emphasis has been put on Alaska. We have a tremendous amount of money coming to Alaska. Not only just federally wise, but also private dollars are coming in here as well. The doors have been opened up for resource development here in Alaska. We do have a significant housing shortage. That's not just in Fairbanks, but it's all throughout the state. We need more housing. So for us as investors, that's a good position to be in. And that's one of the reasons why we wanted to see about getting another, especially this large asset up there, because we want to continue to acquire more assets in Fairbanks and centralize a lot of our, maintenance and our staffing in order to do everything in-house. But again, there is just so much money coming into Alaska right now that everything is just going to go up. So,
yeah. So let's see, diverse economy. Fairbanks' economy is supported by key industries such as government, healthcare, and education. Major employers include the Fort Wainwright, that Air Force base. I'm not even going to try. I'm going to get tongue-tied on that one. University of Alaska Fairbanks, ensuring a steady demand for housing and services. Year-round appeal. With long summer days and lively arts and cultural science, Fairbanks offers active lifestyle in the winter. Residents and visitors enjoy world-class aurora viewing, dog mushing, skiing, and making it an attractive place to live year-round. Strong sense of community. Despite being one of Alaska's larger cities, Fairbanks maintains a welcoming, close-knit community. Residents value the friendly atmosphere, local events, and support for small businesses. Strategic location, Fairbanks serves as a key transportation and logistics hub for interior Alaska as well as the North Slope, with access to Alaska Railroad, the Richardson Highway, the Fairbanks International Airport, and military bases. Its well-developed infrastructure supports continued growth and investment opportunities. Real estate potential. Fairbanks offers a range of investment options from single-family homes and multifamily properties to commercial developments. The combination of economic stability, ongoing infrastructure projects, and a resilient housing market makes it a prime location for real estate investment. Fairbanks combines economic opportunity, outdoor adventure, and a strong community, making it a great place to invest and live. Key demographics. Median rent, $1,600. Median household home value, $315. Average household income, $72,000. Here's some of the military investments: the arrival of F-35 Lightning Squadron, KC-135 refueling planes. Alaska and whole. I'm sorry. This is just Fairbanks. 38% of the renters, or 38% of the population is renters up there. The average vacancy rate, 11% for the area. But you got to remember, we have a 60-person waiting list for this property because of the LIHTC structure. And the way the LIHTC works, the government comes in and says, you can only rent to X amount of people that make this amount of money and below. All right. Because sometimes their money, their income levels are not quite enough to get them into a regular market rent property. I think I cannot remember, our average rent is, I believe, $1,100, $1,200 for this property per unit. And you can see what the average rent up there already is, $1,600. So we are able to give the opportunity for people that do not make as much money as some of the others in the area to have a place that is well kept, and that they can be proud to call home. That's the biggest thing, is give them a nice place, being proficient on getting, maintenance items covered and things of that nature, to where that they feel wanted, and not just, we don't operate slumlord type properties. That's just not us.
And even though, it states an 11% average vacancy rate for Fairbanks, as I mentioned earlier, we do have a tremendous amount of investments happening into Alaska. About a couple months ago, I met with one of the larger financial institutions, actual economist on their staff. And, he verified that, our biggest issue is ensuring that we have enough housing, and they're actually seeing loans being taking place right now for a lot of the business developments that are taking place, where they are literally building multifamily buildings just so they can house their workers because there's not enough place for them to live. So, I mean, that's a big, big telltale sign right there that housing is going to be one of those things that's great for investors to get into in Alaska.
Yep. Over here on the right-hand side of the page, you see the city data, population of the borough itself, population change, males, females, all that. Yeah. Moving on. Major employers. So you have the Education Research, University of Alaska Fairbanks, flagship campus of the University of Alaska system, employing facility researchers and administrative staff. Fairbanks North Star Borough School District, one of the largest employers in the region, providing jobs for teachers, administrators, and support staff. Military and government. Here we go back again, talking about how big of a player the military and the government is up there in that area. Healthcare and social services. Memorial Hospital, the region's primary healthcare provider, employing a substantial medical and support workforce. Mike, what is this? Tanana?
Yes, Tanana.
Tanana Chiefs Conference, a nonprofit organization providing health and social service in Alaska Native communities. Energy and Natural Resources, LIHTC Pipeline Service Company, manages Trans-Alaska Pipeline System, offering jobs in engineering, maintenance, and administration. ConocoPhillips, Hillcorp, and Santos, major oil and gas companies with operation in Alaska, contributing to the regional employment. Doyon Limited, I'm probably saying that wrong, a large Alaska Native corporation involved in oil and gas, utilities, and tourism. Fairbanks Gold Mining, a key player in the region's mining industry, providing jobs in extraction and related fields. As you can tell right there, go ahead.
We have a few more gold mines going into action here soon in Alaska as well. So,
so I know y'all don't know this. Pipeline has been in my background for the last 10 years, 15 years. So there is a new pipeline that's fixing to go through Alaska to the tune of about $2 billion. I think it's roughly 900 miles. So it's, that's going to bring in a lot of work and some of the secondary employers, not just the companies that are building the pipeline, but the companies that supply all the materials to the pipeline company. They're going to see growth. Everyone's going to see growth in this area for that new pipeline that's coming through.
And Japan has already approved it's no longer an intent. They are actually an investor in that pipeline. So because they want our natural gas. So
David and Mike, I am mindful of the time here, and we want to give our participants plenty of time to ask questions. So I still see about halfway there with the number of slides. So I would request maybe expedited, and we can give, like last 15 minutes.
Some highlights.
Great.
Yep.
And for those who are really eager to learn more, and we can share these OMs. Please share your email address. I've put in my email address there, staggeredequity@gmail.com, or you can put in your email address here in the chat window. That way we can share this OM with you once we do an NDA.
Okay. We've already talked about the property management, so we can skip right over that. Underwriting assumptions. We've went through the majority of this. Transition timeline 6 months, hold period 6 years. We're just saying transition timeline 6 months. That's to get everybody, acclimated to the new property management software and the ways of being able to utilize it and things of that nature. We spoke about CapEx. We're looking at a target exit price of $18.5 million, exit price per unit of $142,300. Annual rent growth. This is where we're going to talk about, some of our, conservatism that we put into our underwriting. Annual rent growth at 3%. Now, as I said earlier, LIHTC is generally running in the neighborhood of 3 to 5%. So we're covering on the low end of this. We could potentially see upwards to 7, 8% in a couple of years for this rent growth to come in. Stabilized vacancy rate 1.75%. As I told you, 60 people waiting list. So we're going to be hopefully less than 1% here on an average per year. Exit cap rate 6%. Capital raise 1.8 million, and then we go back through some of the loan structures here again.
Okay.
Now this is some of our underwriting, or this isn't some of it. This is our actual, year-to-year pro forma here. So you see right now, average rents is $12.89, 3% rent increase up here across the board. These are the new rent numbers, $13.28, $13.68 throughout the next couple of years. We are actually, anticipating 3.5% kind of vacancy and concessions total. We know we're going to beat that. Other income, this is late fees, washers, dryers, things of that nature that come in right there. Real estate taxes at $116,000, insurance $160,000. We do have some good news about that. Contract services, trash removal, electricity from vacant units. Gas, this place is 100% gas, so all units are heated by gas. Water and sewer, legal, management fee, repairs, maintenance, turns, general admin, payroll, advertising, grounds management, all that. Good news about the insurance. We have since got an insurance quote for $90,000, so we're going to be adding $70,000 to this NOI, from day one. So that's a plus there. These are the returns that you can see. As I stated earlier, we're not relying on any type of refi to give some inflated return metrics. These last couple of years, if you relied on a refi to inflate your, and I say inflate your return metrics, I'm using that term kind of loosely, but 2 years ago, you didn't know what the refis were going to look like. We know what this is going to look like from day one to the end of the exit time with this, because we're not assuming a refi. We're sticking with a assumable loan. And so these are your return numbers, cash on cash. You see it just constantly grows every year. If you invest $50,000, when we sell it, you'll get $50,040 back. You get your investment return back, plus the $21,000 that you collected throughout years 1 through 6, for a total return of $121,333. Here's some of the return metrics there. Total return 142%, IRR 17.85, average cash on cash 7.1, AAR 23, almost 24%, and the equity multiple, just shy of 2.5.
And these are all conservative, so for sure.
Yep. Tax savings and increased cash flow. A cost segregation study accelerates depreciation, reducing tax liability, increasing cash flow in the early years of ownership. We do plan on conducting a cost segregation study on this. Bonus depreciation. Now, whenever we first started looking at this, we was running into the 60% for an additional first year depreciation deduction. Now the big beautiful bill's passed. We're going to be looking at, I believe, back at 100% on this.
100%. Yeah, it is 100%. Yep.
So these depreciation advantages pass through to investors, helping to significantly reduce tax liability and enhance overall returns.
Good.
A little bit of why to invest. I think we've kind of covered this pretty thoroughly with, the way structure of LIHTC works. And obviously the economics of Fairbanks. So we've got that. And as you can tell, these dates are a little late or have already come and gone for the May 1st commitment. That's just because we're waiting on the government. I think everyone loves dealing with the government. If you have any questions, reach out to anybody. That if you feel like you maybe embarrassed to ask you a question, don't know, how to ask a question, something like that, reach out to, Reshma, Prob, myself, whoever, and we can definitely get your question answered And
David, we have actually a lot of questions that I see
really,
in the chat. We don't let our participant unmute, so they will be posting our questions here. And I know that Mike was answering few of them, but I will read them to you if that's easier for you.
I'll tell you, I want to stop sharing. That way I can see the questions in the chat. Is that okay?
Yeah, sure, yes. Okay, so the first question was, will this property cash flow day one? I think you already answered that.
Yep. We anticipate the property cash flow in day one.
Okay, and that will be 7.1% cash on cash just based on the cash flow every year, correct?
That's going to be the average. The 7. I believe the first year is 5.6.
Okay, and it says, distribution is quarterly. So we have another question. Given the market situation, have you had capital calls? What is the median return you have provided your investors in the last few years?
Have we had a capital call? On a syndication deal? No, we've not had a capital call on a syndication deal. We had a couple of JV deals that we've done, and the partners all divvied up their percentage of the capital that was needed. The only one there's two of them. One of them was in South Carolina. We only needed an additional $50,000 to complete some CapEx there. We've got that done, and then we've got one in West Texas that we have invested a little more than what we anticipated for renovations.
Okay, and what is the median return you have provided your investors in the last few years?
What's as far as cash?
It probably is the IRR.
IRR, we are generally in the neighborhood of 18, 19, right in that area.
Okay, all right. So how much of your own money are you investing? That means like all four GPs.
So Sean's got 150 in it. I've been covering some of the lawyer fees on this. And then we've got some other fees that are involved in it already. I'm trying to remember the exact numbers. I don't recall right off the top of my head.
Okay. So how much are we raising and how much do we need in terms of cash now?
So we're raising 1.8. To close the deal, I believe it's going to be 950 to close the deal. The difference is the CapEx. We're raising that out of pocket. We've got EMD that we're returning. We've got all the other associated fees with HUD and the loan assumption, things of that nature. And then I believe we have a 2% acquisition fee in this. I don't have the underwriting right in front of me, but I believe that was all of it.
That's okay.
And maybe I'll add, given David, there's a quick kind of close timeline here. I guess whatever is not going to be raised from investors. I mean, I think the partners will just come up with the capital and bring
and we can continue to raise after as well. So
exactly,
it's not an issue. Yeah.
So that could change. And
as far as closing, I mean, there's no problem with being able to close.
Yeah, this is just for context for Amy, I think who asked the question. Compared to some of the other projects that we have worked on, there's the capital need here is not a huge, given it's a differentiator in that most deals that I think we presented, I don't think we presented any deal that had an initial like day one cash and cash. This one's slightly different. It's not a game, play where you hold on, kind of rehab and then increase the rent and exit, and that's where most of your money comes from. Here, it's still cash flowing opportunity where you can get cash from anyone.
The deal that we bought last year from the same seller, day one cash on cash. It was cash flowing day one. Distributions went out month 3, 6, 9, and 12. So we haven't missed anything there.
Right.
So it's a very similar deal. when we expect to run it the exact same way. And if I'm not mistaken, that deal is meeting our expectations.
Mm-hmm. Yeah, it definitely is.
So maybe we'll talk about what you see as risks here, David. Then, I mean, like, I know the execution risk is there, always management team not doing the right thing, and the cost creeping up, et cetera. Any upfront considerations that you have in terms of, oh, we'll be really, keeping a close tab on one or the other risk factor here?
On this deal particularly, no. We feel that this one is 100% safe. Because what you have to remember here is we're only paying debt on, or paying a monthly payment on $7.4 million in debt. We've got almost we're going to have over 700,000 in net operating income every year. And then we have the 750, 800,000 kind of safety net for CapEx that we're inheriting from the seller also. That is the HUD, mandate that we have to maintain. We have to put X amount of dollars into this account every year for CapEx and things of that nature. So with them having a safety net of $800,000 already built up, there's nothing that needs done to it, outside of the security. That's not something that's maintained or pushed by HUD. That is something that we see that we can, benefit our tenants. And that's the reason why we're wanting to do it.
Okay.
Maybe a quick follow up on that. I know there's one more question in the list. Reshma is eager to go through that, but since the security question came up, is that a need or is that just want, Dave? On why?
That's a no, a want, not a need, but a want.
There's no security system, or is it just
there is? It's outdated.
Okay.
Yep, it's just an outdated system. It was put up whenever the buildings were put up.
Okay. And this is a security system that you're saying, like external, perimeter security and
cameras,
security, et cetera, cameras and
door, the
getting in and out,
door alarm, things of that nature. Yes.
Mm-hmm.
Yeah. I didn't get this. It's not gated, right? I think it's open access for the most part. Yeah.
Yeah, it's open access.
It's open access.
I'll let Reshma do other questions, please.
Sure. So I forgot to read the first question from John here. Who are the major employers in Fairbanks, Alaska? Over the last 10 years, the population has decreased. Is that a concern?
No, not with the news that we're hearing.
Given all the economics that are happening in Alaska right now, and all of the evidence that I've seen regarding with economists, and also watching what's been happening in the political world, we have a massive green light for significant economic explosion here in Alaska. So.
Okay. All right. And there was one more. Yeah. What is the eviction rate, economic versus physical occupancy for this property for the last 3 years?
The eviction rate is very low. I do not have that number in front of me. The main reason people move out of this property is because they're military and they catch orders and they have to go. That's the biggest reason why people move out of this property.
Okay. So the economic vacancy versus physical shouldn't be all that much in that case, right?
It's not. I think I underwrote it for 0.5% for economical. Yeah.
Okay.
We need to understand too that there is a really big difference between a standard everyday privately held multifamily complex and something that is LIHTC based. There's a very big difference between the two. With the LIHTC, you just got a big waiting list because people and the other beautiful thing about the LIHTC too is that people have to follow the rules in order to get the benefit of a reduced rent. You don't follow the rules, you don't get to be in the program. So that really sets appropriate boundaries for good behavior. So.
Okay. Thank you. All right. So we have a few minutes left. Prob, do you want to go over the highlights really quick in terms of return? And I know you were saying something, but I wanted to read the questions out.
No. I think, I don't have immediate questions at this point. I would if there's anybody else, let's give them opportunity to continue to ask questions. If not, I'm curious, so I'll chime in.
Sure.
Anything else from the
I think for a few people who just joined, they wanted to see the return slide one more time, if you don't mind,
Is it
David.
okay if you share that, David?
Let me find it again. I closed it completely out. Let's see here.
Oh, while he's doing that,
Maybe
I'll share.
while David is pulling that up, Mike, in terms of what is the total spend, or do you know about the budget that the state of Alaska has for LIHTC support, the housing support, and then is there an allocation by borough or the areas, or is Fairbanks, and how many other kind of competitors are there who would be competing for that funding, if you have those metrics handy?
Well, there's no funding that we're getting simply for the fact that this is rent control. This is not rental assistance. So there's no additional funding that's needed. All of the tenants are paying for this themselves. We're not subsidizing anything.
That's a great clarification. And in terms of that loan payoff, is that part of, there's a second loan where it gets written off. That's part of the funding though, right?
That is Alaska. That's an Alaska housing that's already been, it's an assumption. So that's not a new loan that stays in place. So we're just assuming it. So we're not having to compete for anything new. We've already got it. Does that answer your question?
Yes. Yeah. And so basically, I mean, just for, everyone's benefit, we will not be, there are a few messages here on the private. We will not be applying for, hey, government, please pay us X, Y, Z.
No.
Or even going after, all the red tapes.
No, and quite frankly, I mean, right now, given the political climate, I'm not sure that we would want to get into anything new that requires new funding. We're going to let things shake out and let the government do what they're doing right now. We are focused on existing LIHTC deals that are currently happening right now, not establishing new developments to go after the LIHTC credits. So.
Yeah.
Okay. And so here, it says return of member capital year 6, 50,000, and the same year another 50,000. Is that because you're assuming refinance or sale, or why?
No.
Like two different lines there?
Yeah, that's the sell.
Can you expand that, David, please?
Yeah. What's that?
Can you maximize that window, please?
Yeah, I gotta stop sharing real quick, but I can do that.
Should be easier for everyone to see.
Where did it go? Go back to share. Yeah, so we're anticipating selling year 6, because that's when the prepayment penalties run out on the existing loan that we have. We just don't want to incur any more fees than what we have to. We're trying to make this deal stay as sweet as we can.
Right. I was just curious because in line 6, you have 50,000, then 50,000, but it will be in the same year.
Correct.
That's right.
Right after the sale. Okay.
Yeah, I think it's the top line you see, it's being carried forward, right? The beginning member capital, that's being carried.
Yep. That's right. This additional investment, that's correct. Yeah. This is the return of investor capital from the sale.
Mm-hmm.
And then this is the return of the investor capital, that 50,000 there. And then this 4,400 is the projected cash flow for that year.
If I may, I'd like to ask you guys a question. This particular deal, as you guys had mentioned, this is not a value add. So this is, up and running from day one. And in my opinion, seeing an AAR of 23.78 on something that is not a value add is pretty lucrative, in my opinion. From your standpoint, based on what you have seen on a property that is not a value add, would you say that AAR is high for something like this?
I'll chime in. Absolutely, Mike.
Mm-hmm.
And so when we are looking for return and or advocating a property or proposing investments from our partners and collaborators, we're looking at risk versus return premium, right? And you take the risk, and for taking that risk, what is the return that I would expect, I would need to take that risk? And so that's very standard protocol in in investment for any investment.
Yep.
Real assets already are de-risked by the fact that they are real, and you can go touch, feel, they have value. It's not like buying a stock of a company that could go evaporate over time, right? So there's that. In the real estate world, in the real return, it's the return expectation is in the 20s and above, for only because you're taking risk of the exit risk is really high, the execution risk is really high. There's a number of risk profiles that are associated with having to manage the construction. There's risk in going over budget. How many times have you seen a project complete in time and complete in budget?
Right. Yeah.
So when you have a property like this that's fully stabilized, it's a pure cash game, and there's cash and cash from the get-go. Definitely the risk premium that investors seek is a lot lower. And so with that, I would think that people would be comfortable and even excited in the 15% plus kind of return scenario. So this stands out in my opinion. But again, each investor have their own appetite.
Sure. No, absolutely. It's very similar kind of how I've been presenting some to my investors. I mean, this is, in my opinion, this is about as safe as you're going to get when you're talking about a private equity multifamily investments, and versus some of the other value adds that we've done.
Absolutely. And the other thing is, I mean, you got to factor in your downside, right? So when we're underwriting, this is maybe a normal case. There's probably a best case and there's probably a worst case. On this one, there doesn't seem to be a lot of upside either, right? Because your rent increase is constrained by the fact that it's well regulated. But then there could be other downsides, and I would definitely kind of look at those and, okay, well, if 7% of the return goes away, am I still okay? Like, yeah, I would be, right? And so this is what makes some of these deals attractive.
No, good point. Yes, absolutely.
So we're coming up to an hour. Any last minute thought, David or Mike, before we wrap up?
No, I would just say that, at the end of the day, we really focus on conservative underwriting, because we're not a transactional based type of business people. We look for long-term relationships. So our whole goal is to get investors excited enough to where they come back and they want to invest in future deals. So we want that long-term relationship. That's why we do our underwriting so conservatively.
Very good. And I can second that, because after doing the deal with Mars and you guys the first time, we were so excited, and so we're here talking again. So I can totally attest to that long-term partnership approach to doing business here.
Okay. Before we part our ways, if you could just tell us a little bit about the timeline, minimum investments, that would probably be very helpful.
Yeah. So minimum investment, we're asking, investor minimum is $50,000. If you have more, you can invest more if that's what you want to do. Timeline, I was actually trying to get that exact information out of Sean this morning. He's got one more piece of paper, I think, that he has to read over, sign and submit, and then I believe we're going to get that timeline. We feel like we are within, the 30 to 60 day range on closing this is what we feel like we're in. Then again, we're dealing with a government. So it could be I'm not going to say it's going to be tomorrow, because that won't happen, but it could maybe be an additional 30 days, maybe up to 90 days. But we feel pretty confident that it's within that 30 to 60 day range right now.
For our partners, viewers, audiences, if you're thinking of investing, I believe this is not going to go without commitments for 30 more days. So if you are thinking of investing, get into the deal details. If you need anything, let us know. We'd be happy to talk. And I would say maybe sign up for the deal before we are fully funded and oversubscribed. So with that, one more question on, is this an accredited investor only opportunity, or is it open to others?
It's a 506B right now.
Okay. Perfect. So that means you would not have to prove you're an accredited investor and invest it in this deal. Reshma, any parting thoughts from you?
Oh, no, that is all we have for today. So
thank you, everyone. Thank you for joining us in our series webinars. We've been missing in action for the past month or so, but we were really busy with exciting opportunities, and we will talk more about that in our next episode. Until then, good night.
good night. Thank you.
All right. Thank y'all.
Good night.